Morning. All right, so we'll get started here. So, obviously today's Thursday, so this is the higher probability day that I wanted to trade, as well as tomorrow. Take a look at your economic calendar. We have no news today, no news tomorrow. That's on the board. So obviously those tentative news drivers got removed, but that was back on Monday that they got removed. So nothing different. But now that they start removing and adding calendar events, I would suggest that every single morning you wake up, you just check that at least once, just to make sure there's nothing that's going to surprise you. So for the weekly profile, and obviously my bias for this morning, I was looking for, if you have not seen those models and reviews like daily biases, and the associated weekly profile that I was looking for a Wednesday low of week. With Wednesday FOMC dropping to the range, forming either a retracement or the low of the week, and then Thursday and Friday to continue the expansion higher. We had this last retracement leg target, and we missed it by a hair on Wednesday. So the specific weekly profile that we're in is harder to determine. And I was tempted to take an overnight trade and place an overnight limit on this fair value gap here as a buy limit. But to me, there was not enough information that would have let me feel really confident that it was going to expand. And I was on a call with a gentleman yesterday, and we were talking about his bias as being bearish of this week, my bias being bullish going into Thursday and Friday. And I think the conclusion was there still wasn't enough data coming into basically midnight to extensively extrapolate the entire rest of the weekly profile with confidence in order to take an overnight trade. So we both just ended up leaving, kind of just 50-50 and letting the morning play out. And whatever it was coming into the morning session today would obviously reveal itself as the correct weekly profile and clarify some things. So obviously, right as midnight struck, just tanks back down into the 1 hour gap. And this is the first time you see order flow flip on the entire weekly profile. So Wednesday technically is still holding the weekly high. Now, this is obviously placed during Asian session of Wednesday, so it's very, very late. Nonetheless, midnight drops down, completely inverts this IRL here, and you see it being used as an inversion. And then at 8 a.m., it drops again and tanks and takes out this secondary swing low, forming the secondary displacement. So as you look in the daily chart, we have still this daily IRL that I was calling for in the beginning of the week to be traded into. Now at the later portion of the week looks to be the expansion target, and preferably, like I said, we would fill all the way down into this void. I don't know if we're going to get all the way down there, but given the volatility of Monday and Tuesday, I would find it perfectly within the perfectly within the realm of possibilities that Thursday and Friday also have sufficient volatility to just completely tank us another 300 points. As you've seen, this morning session has already moved 175 points since the market opened. So, reading the 4 hour and the 1 hour chart, you're looking at this. I really don't think there was a lot of information that going into the morning session that I'd be bearish off of it. And I'm happy that I'd waited towards the AM session to really gather that data. Now, for downside targets, obviously the entire daily IRL is being served as one. But more specifically on the 1 hour chart, we would love to see the Tuesday's low and preferably the Monday low also being ran out. Obviously all that low resistance sell side liquidity that we had marked out on Tuesday and Monday's post-market reviews. So not the best weekly profile. And this just goes to show you that, number one, I'm not going to be perfect all the time. And neither are you. But more importantly, you can still have a weekly profile in mind and play around that kind of thesis on Monday, Tuesday, Wednesday, and even when it's wrong, it's still going to supply you with correct data points. So I think the weekly profile that I had in mind protected me and also provided winning trade opportunities on Monday, Tuesday, and Wednesday. And now later in the week, seeing that it's probably, it most likely is incorrect based off of the data that we're seeing, we can adjust and change our viewpoint. So I'm not concerned with being right or wrong. I'm not concerned with, calling the weekly profile from Sunday. I'm more concerned with, can we get a winning trade? Protecting myself from bad probabilities, low probabilities, and seeing the market for what it really is. So I encourage you to, when you have a daily profile or a weekly profile or whatever that's incorrect and blatantly incorrect, not to immediately start jumping on the ship of trying to short this as soon as 9:30 opens, but still let the data print and feel confident in your own entries. So as soon as 9:30 comes down, I don't see any entry in here. So I'm not going to start chasing price just because it starts going away from what my original intended DOL was from Sunday. So on Thursday right now, I have all these 1 hour pools marked out. Obviously, this 1 hour pool here indicates the daily bisi as well. So we're going to keep that in mind. As we're obviously seeing a retracement here off the daily bisi. Then I have the AM session low from Monday. And then I have the liquidity void open and the liquidity void close, basically, of the new week opening gap. All right. Now, I'm not saying it's going to completely tank. I'm just watching the data today. 15-minute chart. I got both those pulled up on ES and NASDAQ. I've got the daily chart, the 1 hour chart, every single chart pulled up basically and monitoring it. So just because it's a high probability day today does not mean that I'm outright going to take a trade. If I don't like the setup, I'm not going to take it. Simple as that, any given day. So it really has to fit my requirements for something that I'm looking for. And I'm still kind of just meh on my bias, flat on my bias. I want to see if we can really get an expansion move higher. Now, at this point, I don't think it's going to expand up to the external range. Be a very, very late weekly profile, basically a consolidation reversal profile. So we'll have to watch and see. We have the first presentation for value gap here, lining up with the PM session low. Yeah, all those charts looking crazy, right? So a little bit of decoupleness, and it's holding daily in 4 hour arrays. So just shorting it, like I said, shorting it into nothingness as soon as 9:30 opens is not really what I want to do. Technically, there's no news, right? So waiting for 9:50 macro is probably the best opportunity, or even after that, if we can see something clear. Obviously, getting some balanced price ranges in here, almost a couple of them. And we still have plenty of buy-side liquidity above us, right? So London session in this case, kind of just in the consolidation of doom. If you're looking at it, Consols doesn't leave the London high available, and it runs it out prior to the 7 a.m. Opening price. So we're in a deep discount relative to the daily candle. So you just got to be careful, really. Tiny, really imbalanced trade into here from the opening candle to the 949 volume bounce, takes into it at 950. You can see the displacement we're seeing. So I'm going to stay hands off until something pops out at me and I can be really confident about my bias. Obviously, run on stops on the FOMC low, but we still have to get through all of this mess if you want to go all the way back up. But yeah, take a look at YM is skyrocketing right now, going back up for its weekly high. And I think YM actually is, in this consolidation week as well. almost running out their Monday low on Thursday, and now it's coming back all the way into the range. So a lot of this weird PA, you can see ES completely, did it tag it? No, it didn't. Ran out the Monday liquidity pool, but didn't tag the liquidity void formed yet. So challenging higher time frame weekly candle, and therefore challenging intraday sessions. I hope you've seen from Monday, Tuesday, Wednesday. Each of those New York sessions have not been the cleanest ones. So hopefully you can come to appreciate anticipating weekly profiles and what they mean for intraday price action. So, like I said, you still have this BPR forming. We're going to monitor the 5-minute as well. I might let opening range just completely play out and see if we want to take something after that, but I'll have to see. Next. Seven a.m. high, 15-minute liquidity pool, and imbalance. So 9:30 failed to run above there. Like ES didn't it? Yeah. So remember, this sell side down here is the daily imbalance. So we just got to run right there. As well as the Tuesday and Wednesday low for value gap. So quite the wick forming here on 1-hour chart and a balanced price range. I want to see how these fair value gaps are being held. Now, like I said, if we continuously are holding these PD arrays on the 5-minute chart, we get a good closure above this 15-minute IRL, then I'll consider taking a scalp back up to the buy side there, intraday buy side at the 7 a.m. high, intrasession. But I'm having a little bit of a struggle identifying the correct weekly profile and daily profile. So, I mean, this is such just a deep retracement coming back into the range and just taking out the swing low. Just confused as to why I would have to. Because we already had SMT at this low between ES and NASDAQ. Let's notice how it's just barely giving these retracements here. One tick there, one tick there. So this could move 200 points up and down, back and forth. But if there's no high quality entry, I do not want you to feel FOMO, right? FOMO is very easy to come into the marketplace when the market is moving, but we sometimes don't feel market FOMO when it's consolidating at a large range. So any price action outside of your model and outside of your bias should be considered noise. And as a result, you need to filter out of your, I mean, everything should be filtered out of your emotional thoughts, but especially this, when it's down 200 points, up 200 points, it seems like you're missing the entire thing. Don't worry about it. All right, this is just another day. There's going to be a day tomorrow. There's going to be a day next week, 5 days in a row, and there's plenty of opportunities left. So never once feel like one day or one trade is your end all be all. That's how you blow an account. So same thing in here. It's holding the changes to delivery on the 5-minute chart. This is technically a inversion order block, but you don't see any displacement through it. I would have liked to see if your value gap there and then trades into that. You have a volume balance instead. 2-minute, yeah, still volume balance. Yeah, we've had such an overnight move. Minute opening price is here. 500 points or so. And if this is the last manipulation, then you got a beefy target, which would put us back up towards, I mean, I'm definitely gonna have to review today. So it runs the 15-minute IRL, respecting it. Same thing with ES. Now, how we react out of this gap is going to be indicative of the entire rest of the session move. So we failed to manipulate into the 15-minute IRL at 9:30. This right now is really the last available time if it's a high quality session for us to do so. So in the case of it being a double Judah swing, this reaction here would kind of tell you the rest of the session bias. So whether or not we see displacement away or through this gap kind of is the condition for my bias for the session and preferably for the day as well. And the reason being is obviously a session low or session high needs to be formed on top of a 15-minute or higher fair value gap. And obviously time of day is now approaching the close of the opening range. So if we want to see our standard session dynamics play out, whether it's this or the inverse, and it being a timed opening range low or opening range high, this reaction here basically tells me everything I need to know for the session. So whether it wants to be bearish, then this is the last available time it can run into the 15-minute PD array. If it displaces through post 10 a.m., obviously, then that shows you that this is the time-based low tagging it's the daily imbalance. And we're more likely now to reach for a 4-hour PD array or a 1-hour PD array in premium and potentially back up to the all-time highs. So we're going to wait here for a second. I'm going to be watching. I'm going to turn this off. Watching this swing high, obviously. But as of right now, order flow is still bullish. We have a balanced price range and breakaway gaps being formed at the low end. We have a change in state delivery from the 5-minute chart being traded through, and the 5-minute also closed above there. So lower time from order flow is showing something otherwise different than 15-minute. So we have to wait for them to align, and waiting for them to align would be simple as waiting for the 10 a.m. candle to open and close. And then now you have this alignment of the 1-hour candle, the 15-minute candle, the 5-minute candle, the 1-minute candle, so on and so forth. So multiple wicks back into the VI, like I said. Here's your 10 a.m. Takes out the swing high inside of the IRL. And you can see the displacement that we're seeing. So assuming that, there's a couple more 15-minute PD arrays above us. But to me, the fact that we're making this huge wick, running out the south side, tagging to the daily imbalance, inversing now this 15-minute IRL, 5-minute changes state delivery, 1-minute breakaway gaps, and PD array started to hold, I think we're bullish, right? So as long as, especially if we can take out this short-term swing high post 10 a.m., that's even better. But for the remaining part of the session, I would imagine that we'd like to see at least the 7 a.m. swing high go. But we just have to be careful. I'm staying on the sidelines for now because I don't want to just be jumping in off of nothing. And you can see on the 1 hour chart, you get a little bit of a different view. Runs into the daily imbalance, trades back up into premium IRL from the volume balance, and also this gap here, right? So completely just longing into this range and trying to target all those stops while we're inside of these two PD rays is something to keep in mind. So you can see that I'm constantly going back and forth and deliberating between the two sides. I'm weighing both sides on the scale because I don't want to be taking a trade if I don't understand the bias. So as soon as I'm not flipping bias as soon as I see one data point that may suggest me being wrong. I'm also not just holding to my confirmation bias of whatever I wanted the start of the week to be, or whenever I wanted the start of the day to be as soon as I open up the charts. It's constantly interpreting data and looking at multiple time frames, cycling time frames, and I'm looking for specific things on each of those time frames. So if there's a day like today where you may not have a clear bias coming into opening range, this is what you should be doing. So let opening range play out, see if there's obviously consolidation. In this case, there's not consolidation, but set a larger range and multiple PD arrays that can pose significance to either side. So monitoring both ES and NASDAQ as well. You can see in here, there should be a 1 hour gap. Yep. So 1 hour fair value gap up here. Layered with side of that 15-minute pool and 15-minute OB. Right? So it's like conflicting data points. So you can see multiple times it's coming into that VI. And you can see 10 a.m. Notice this 10 a.m. high, right? This is the last available time if we want to form a perfect session. This is for 9:30 to 11 o'clock to form the high of that range. And you can expect a double duty swing like this would be reasonable since the fact that 9:30 failed to tag into any 15-minute swing high. Now, technically early in the session we've done so, but 9:30 in this case, since we have no news, should be doing something meaningful in terms of manipulation. So still dropping down and holding that volume balance with the candle bodies. And no displacement yet through this order block. So I'm not expecting it to hold yet. Getting the cycle time frames, 2 minute, 3 minute. Got a 3 minute fair value up there. Boom. That's of more interest than the VI to me. Fair value gap. Boom. Extend this to the VI so now we can see a little better. Still plenty of time on the board. So just because it's macro time, I'm still gathering data. So there's no reason for me to take a trade instantaneously. Although I know this is going to give a really good setup during the macro time, there's still silver bullet. There's still plenty of opportunities after that. And every single PD array, once the session low or session high has been put in, should be holding. So there's time available. There's still price points available. Plenty of movement. Notice on the 5 minute as well, we're digging into a 5 minute imbalance inside of this 5 minute breaker. All of this. Nice energetic reaction we're seeing off of the 3 minute gap. ES as well. Nice. Order block. right up into the IRL, 15-minute IRL again. 15. Let me label all these so it's clear. So now we can drop to a 30-second chart to see if within this low to this swing high, if it wants to hold PD raise. And it wants to be done with this retracement. So the reason I'm dropping to the 30-second chart, the 15-second chart, is to see if this swing low placed inside of the 3-minute fair value gap is the end of the retracement. If this is the end of the retracement and now we're entering into a buy program, we should be holding PD rays that are formed within this swing low and really the implied dealing range high. But we're looking at the right side of the chart, so this swing low and this swing high. So we're watching this gap if it wants to be holding. And if it does, then it's not a big deal. It's more so just, can we now trust this as a stop loss placement if we decide to limit order or market order in off of whatever PD ray on this side of the curve. So you can see the little gap there is now validated this as an order block. As soon as it takes out that opening price. And now you want to see if candle bodies want to stay within this candle body range. So this entire range here doesn't want to be being used as a bullish order block. So looking almost for immediate rebalance here, and then for it to take up most of this range and approach the 10 a.m. 10:30 candle. Sorry, 10 a.m. 30-second candle. So prints back inside the fair value gap and below the candle body open. So not doing something that would be indicative of a order block hold. Although it's still closing within the wick low, but still watching the gap now. So boom, so it's going past 50% of this order block, which should have been low of the retracement. Therefore, it's likely to take out this swing low and dig further towards this gap and the respective order block here. So let's take out that swing low. Thank you much. And now it should start to fill in more of this gap and preferably touch this order block. There you go. So tags the gap. Now on a 1-minute chart, this is preferably just a wick. So it should just be wicking into this gap. Let's actually keep this one. Now this is displacement, right? So if we see a fair value gap print here and this candle closes really heavily past this order block, then best to stay hands off until we see new order flow. But as of right now, price action is leaning bullish. Now there's your wick, right, on the 1-minute chart, holding that fair value gap for the most part. But on the 50-second chart, 30-second chart, you can see now the inefficiency being placed on top of this bearish order block. Inside of the 3-minute gap, there's a touch of the OB. Just like magic, right? Now, does it want to hold this? If it does not, we're already past the breaker low here inside of an order block in discount and approaching the end of the macro time. So like I said, this is going to be imperative for understanding the rest of the session where it wants to go. So we're going to keep just this 1-minute fair value gap on with the volume imbalance here. I'm not going to mark that one out. And we'll keep the first presentation fair value gap as well. But notice how now you have a gap, displacement, and this is still being placed at 10 a.m. So take a look at ES. consolidation, a little more bullish than we're seeing over there. Right on stops, it's still holding the bullish order block on the 1 minute chart, and the fair value gap is being printed here. Now we did fail to, what is that? Oh, okay. Now you're basically going to do, if it's bullish, you'd be basically doing the same exact thing as soon as you see a shift or some sort of confirmation of bullish order flow or buy program, doing the same thing as you just did over here. So it tags into a higher time frame array, and then it leaves, takes out a short-term swing high. Is it now want to hold bullish PD raise? If it does not, then you look for another run below that swing low. And since in this case we already saw it break market structure here, and it's disrespecting 1 minute PD raise, if it were to come back down and take out this swing low, only after it gives a buy program signal, that's most likely going to be a shorting opportunity. So it didn't give any indication of a buy program yet, right? So we have to still watch and see. But notice how it's not really holding any 1 minute arrays. It's like that, right? Just took out that swing low. And it's closing obviously below the 1 minute gap here, with candle bodies all shooting below that. It's also below the breaker on the 5 minute chart, the SISD. I want to see if this is discount of that range from here to here. And it is just tags discount. So another important enters into fair value and discount. Now you wanted to watch. Do we see that signature again? So does it want to enter into a buy program and hold whatever respective swing low it's being formed on? So as soon as it takes up the swing high, it'd be an indication of buy program. Shift, boom. See displacement, right? In the last two green candles there. The last one was pretty healthy. This one, love to see. So fails to close above previous candle's high. Still creates a gap. You have to see an immediate reaction and just completely take out that shift. There you go. So immediate reaction takes out the shift. And now does it want to hold PD raise? So now you're looking to be, is this 1013 swing low going to be used as the buy program low? And therefore hold PD raise being formed between 1013 and the right side of the curve. So this is what I'm doing on multiple time frames, 15 second, 30 second, 1 minute chart. You do not need to do it on a 30 second, sub 1 minute chart. You can do this on the same exact thing on a 1 minute chart. That's fine. That's the way that I learned. But as much data now that can help me, I'd like to use it. So does it now, if we go to 15 second chart here, does it want to use this? It has to respect this bullish order block, or at least this one here is the minimum. If it shoots through 50% again, then like I said, it's most likely going to be a sell signal then. Something like this, where we're going to say, oh, it's going to come back down and take out the swing low. It's allowed to use this reclaimed OB until it takes out the swing high. And like I said, if it comes back down and takes the swing low out, then that will be proper SysD on a lower time frame chart. So there you go. It's closing past mean threshold. It's pretty close. Yeah. Bam. So does not hold the buy program PD raise after it has a shift and tags into a discount array. And since we're displacing like this, it's more likely going to enter into a sell program. You see this as a change in state delivery. So now you want to be marking out, or I'm going to mark out these PD rays here and see if we want to use this as an inversion here. I guess first presentation for value gap, something to be keeping in mind of, but let's see. It should offer, it's a discount PD array, so it should offer premium. Dealing range would be here of whatever swing low we form. Yes. Into the order block, plus 30-second fair value gap. And like I said, it probably should be holding bearish PD rays now. Bearish 1 minute order flow. 5 minute order flow is kind of weak, but just have to watch and see. But yeah, I would love for it to just completely flush the 1017 low and just start to head for the 9:40 a.m. swing low now. Let's go back to a 1 minute. But yeah, so 10 a.m. trades up into the 15-minute IRL. Last available time to do so. It's disrespecting 1 minute PD raise from the balanced price range and holding bearish PD raise on the way down. Bearish order blocks, bearish for value gaps. And now most likely going to target the 9:30 a.m. swing low and maybe lower. The next available liquidity pool on the 1 hour chart that would be time-based is, I mean, technically speaking, the 9:30 a.m. swing low from Monday would be one sell side pool. You could even use the AM session, or sorry, the PM session low from Monday as well. Just short-term target inside of that the 1 hour. Wow, short-term target inside of the daily gap. So this would be a partial opportunity in terms of the daily low structure. This AM sell side from Monday is more likely, and then as well as the liquidity void being kind of acting as that Friday DOL for the remaining part of the week. But we'll have to see, does this want to be used as inversion here? It is definitely a choppier way down. I'm mindful of that. mark out those sell side pools. Where is it? 15. Having some struggle to get through the first presentation for Valley Gap. Oops, there we go. And now this one here, this is a breakaway gap placed within the lower 25% of that implied dealing range. So is it going to be held as like the first presentation for Valley Gap is, or like this one? Most likely not, right? So you want price action to speed through this breakaway gap. And as we target the 930 low, obviously the time of day is London close right now. So anytime it were to take out this swing low would technically be valid for a daily low in terms of daily time. For the session, you preferably see it post 1030 like we normally say. And now since most likely the day, probably the week, I say probably because it's a weird weekly profile, but probably the weekly distribution, most likely the day, very high probability that the session movements are all being lined up. You can probably shoot for 1030, if not shoot for 12 on this kind of day. So I just want to see at a minimum that 930 swing low be ran out at post 1030. Like that'd be great. Even if it's not post 1030, just for that 9:30 a.m. swing low to be ran out. And then preferably, I guess this 25, 895.75 as the partial opportunity externally from the range. So let me screenshot this one, put it in predictions. Bearish PD raise, holding post 10 a.m. Breakaway gap shouldn't. Sorry, I'm typing this up in prophecy chat. Crosshairs would be the PM session low from Monday. Is PM sesh low from Monday. Main target or daily low would be AM sesh low Monday / liquidity void and new week opening gap for the week. Okay, so got a little reaction off of that breakaway gap on the 1 minute chart. You can see just barely retracing. And I would like it to continuously stay weak and just sink through the breakaway gap. And now if you look at the 1 minute chart, we don't really have, the same exact thing over here, same exact kind of breakaway gap. So I guess you could mark this one out too. And then we have a short-term swing low. We're going to study this on a lower time frame chart. Does it want to be held as a to discount rate already below 75%, so it really shouldn't create a huge premium retracement, but rather on a 15-second chart, this normally should create a entry opportunity on a very low time frame, like a scalp. So we'll look at this as scalping. Say scalp opportunity back from premium. So the breakaway gap, not really being used the way I wanted it to be. And it's not sinking all the way through just instantaneously instead of coming back up into the bearish order block here with the first presentation for value gap. So best case scenario, it's still going to hold bearish PD arrays, but this is something for me to adjust on, obviously, in my own tape reading. What is this at? 25, 896. Oops. So, I mean, order flow at this point is, at least to me, it's one-sided. So I'm not going to spend too much time reading into each individual PD array. But I guess we'll go back to what I talked about up here, is if we are failing to create these retracement opportunities, where if you're expected to be bullish or you're looking for bullish PD arrays, and it drops into the gap or drops into whatever discount array, the breaker and the fair value gap, let's say, and then it leaves it and creates some sort of indication of a buy program like a shift or a SysD, and then it fails to hold those PD arrays, well, you probably have something below you. So in this case, it'd be discount of that dealing range, right? And if discount of the dealing range doesn't hold and does the same exact thing, then that shift, as it creates one, normally is a sell signal or an indication to you that it has now changed its delivery, because that would be secondary displacement on a market maker sell model. And you either could take that SysD or you could take the next bearish PD array that lines up with obviously where the next draw on liquidity is. So if draw on liquidity is discount, then you have to take a scalp pretty aggressively. But if draw on liquidity is lower, like it is in this case of the daily low, and lower prices below that, then there's plenty of opportunities normally between the range. So we have a short-term run on stops here at 50%. And we're going to be watching this, right? So if the implied dealing range in this case, let's take this last manipulation like target, -2, -2.5, lining up with the swing low. In this case, if this is 50% of this implied dealing range between here and let's say down to this swing low, this is where you would expect a run on stops. And we have not seen one since here, but that's obviously not 50%. That's pretty far in a premium. So this would be one kind of indication that we'd be entering into a sell program. And if we form a short-term swing low after this, like here, that would be a really good intermediate term high and therefore stop placement. If we had, like if I take a partial off of this swing low and my stop is all the way up still up here, I would trim it to preferably the intermediate term swing high or break even, of course, but either one of those would work. We've also hit 1030. And this breakaway gap is definitely creating a lot more resistance than I'd want it to. So we're going to mark this out as a fair value gap here. And we're going to mark this one out as a breakaway gap. So I was incorrect in my analysis. And price action is also trading further back up into this order block and into this order block here than it did prior. So it's showing you some weakness in terms of bearish PA. Let me clean some of this up. We can still look at this, but it's a little too messy for me. So now we're looking for a change in state delivery. As it entered into a buy program and took out this swing high, that is technically still a buy program. So on a 1 minute chart, you'd have to see a closure through here. On a 15-second chart and lower, we could look for something else. So a shift would be maybe below this swing low, or even a change in state delivery through here would be fine. Start watching to see. IFVG. IFVG. And obviously with speed and displacement is preferred. So there's one. It's trading into this gap, which I'm mindful of. But now I want to see if the inversion first presentation gap is being used as natural support. See, it's coming back up all the way to the OB. Higher resistance. So in this portion, it's in a high resistance liquidity run. Notice how it's coming all the way back up to the last up closing candle instead of respecting the consecutive range. So this is high resistance conditions now. So we want to see, does it want to stay in high resistance conditions and is more likely to consolidate around this range for the rest of the session? Or does it want to finally have a last pump, or I guess dump towards the sell side? Of course, trader funded. Anytime. So deep retracement coming back up towards the intermediate term swing high and filling and holding this fair value gap, but this is high resistance like I'm talking about. So it's coming back up into balanced price ranges, into reclaim fair value gaps, which if it was in a strict sell program, should it be doing that? Most likely not. So we really have to watch, does it want to stay in this consolidation or does it want to leave? And the trader who is just, as soon as they get in a trade, just looking for downside or looking for upside, I don't think is properly reading order flow. So as soon as you get into a trade, if you're just watching for, I'm just looking for black candles, green candles, that's not tape reading. You have to be impartial to price action. So when it is showing you indications of consolidation or of weakness relative to your DOL, you have to pick up on those things. And they're uncomfortable because obviously they may mean that you're going to lose, but they should protect you because then sometimes if you get good at it, you can close out your position before it takes your stop loss. Now, most times you're not going to be doing that. Like 90% of times you're not going to be doing that. There's maybe 10% of times where you really know you're offsides, before it hits your stop loss. But, if you can, even if you can save 1 or 2 R every now and then, I think that's worth it. And also you're more mentally prepared to take that loss instead of being surprised and maybe not owning up to the outcome. You see it for exactly what it is and deal with the outcome. And normally, if it's a good trade, then it shouldn't be too bad to deal with. So same exact thing in here. We're watching to see, does it want to create our change of state delivery for the second time? And since this is the second time it would be doing so after it's run another stop up here and into a higher time frame PD array, this should indicate our sell program. So it should no longer return back up to this intermediate term swing high. Now, if I was in a position on this demo here, I'm in a position on my other screen, which I'll show you. I would be trimming my stop aggressively to here. If it's reasonable to do so in terms of where my entry is. Obviously, if it's not regarding and respecting the risk, then no. But most times, if we had seen this short-term swing low be taken out on the 1 minute chart, let's go back to 1 minute chart. As soon as this short-term swing low is taken out, that would be a good stop trim. We have a short-term swing low taken out here, so you want to see if this IPG is being held. But notice how it's still within this high resistance conditions. It's not leaving this consolidation range right at 50%. And look how it's coming all the way back up to the order block. And not just holding this PD array in the swing low. Yeah, we are decoupled. ES is also climbing up. So heavily decoupled. Now, what that means for the rest of the day, I don't really know. I mean, normally for distribution, you're not decoupled like this. So we got to be really careful in targeting lower and lower and lower. Unless all three of them start moving consecutively, targeting external range liquidity pools that are really far, like the ones that are like these ones down here, this one and the liquidity void, probably unlikely for the day and for the session. That's why I'm saying if it could just take out this swing low, that's great, because then we have a true bearish daily profile instead of a swing to Z. Now, if it stays within this range low, then that means it's swing to Z, and unfortunate. But until 12, obviously. So see how it's just meandering around, it's coming back up, down, up, down in this consolidation. And that's why also identifying it being a high resistance liquidity run as early as you can is going to be helpful for your mental and obviously helpful for the position as you're expecting it to take longer. So you're not worried. I mean, let's go back to a 1 minute. We're stuck on this lower time frame. Let's go back to 1 minute and look how it, take a look at it. So this right now is acting intermediate term high. Oh, actually, yeah, this is intermediate term high now too. Because we just formed a short-term low right here, or short-term swing high there. So yeah, like I said, I mean, I would have liked to see a run below here or here to really cement that in as a intermediate term high. But right now, it's still an intermediate term high, and it being ran out there most likely invalidates the trade idea. All right, so that's where I placed my stop. We're still within this range, and obviously post 1030, we didn't get any oomph towards the rest of the sell side. So a trimmed stop Is the trade still valid? I can't really tell. And if I can't really tell, I'm not confident in it, then it's no longer a really high quality trade. So unless it were to sink and take out the swing low and give um, a sell opportunity off of the IFEG and a change in state delivery, then I don't want to be sitting in this. So here's the screenshot. Took it on a 30-second chart. Let's see, same exact thing talked about right in there. So selling off of the inefficiency with the order block, selling another one off the inefficiency and order block as it gives it to me. Obviously pyramiding in, so lower than the original risk. And then the trimmed stop loss was placed at the intermediate term swing high that I have marked out here on the chart. All right, so high quality-ish day coming into it. Ends up being a little bit of a consolidation, maybe potentially seek and destroy. Not seek and destroy, swing to Z type profile. Still happy with the execution. I think I read it decently well. So I'll obviously do a market review later today for the markup, as this is definitely a challenging daily and weekly profile to be playing within. And yeah, so for the rest of the session, you have to watch it. Entered into the high resistance conditions after it tagged into a discount array, but not until it ran out not before it ran out the sell side. So that being said, we'll wrap up the tape reading stream today. Hopefully it was insightful. You learned something from it. And it is what it is, right? There's conditions that sometimes you can't read or sometimes you just can't anticipate. And look how as soon as it took out the intermediate term swing high, look how far it's coming back inside the range. So trimming risk is still effective, as it always is. And protecting capital, protecting mental capital is just as important on these kind of days as other days, but probably more so on these days as you're expecting it to be quote unquote high probability. So I'm basically flat on the week, I think, as a result. Took a trade, I don't know when, on what, Tuesday or something. And then Wednesday, we talked about the scalping opportunities all in there. I didn't take anything yesterday, and then this one today. So I'm tempted to just sit out for tomorrow and just be flat on the week. If there's something really good tomorrow, then I may take it, but otherwise I'm kind of 50-50 on whether I want to trade. We'll have to see. But as usual, this will be posted up after the fact, as well as yesterday's tape reading stream. So if you've not checked that out, you can. And if you got any questions or want to pick up the PDF or anything like that, the sale, I'm going to post that later today. But the sale is, I think the code is October or something. So if you got any questions, reach out to me. And until I talk to you guys next time, take care and peace.